So I made a video last week, another video, but it did not upload for some reason. So I'm going to make sure that this one does. So we we ended last week down like $500, but we're going to be starting it from yesterday for the whole profit loss. And $500 isn't a huge swing. It was mostly from the VXX. It's been dropping. I'm not too worried about it. So it's like correlated with the VIX, which the volatility in the market, and then its price goes up based on that or something. I don't know. It's weird. I really need to get out of that. But it's kind of too low right now, so I need to wait for things to pick up, which in January they should. Hopefully we start gaining some steam this year early so I can get out from under them and I'm not stuck with them for 3 months or something. Mid-February or so, if it's still low, I'll just sell it. I'm not opposed to that. So it's just something I got to keep an eye on. And if I find a good spot to get out, I will. I didn't do a covered calls on it this week because the premiums are just so low and it's so far below my cost basis that I just wasn't worth the risk if they did get called away, because something like VXX can like really shoot up pretty fast. So I decided to wait. I also waited with the Riot because Riot is going to be a company that is going to have huge jumps. So like today, it's up 5.65%. So I don't really want to sell a covered call on it now. I'd rather just take in because I want to hold on to that. So I think it's going to make money for me in the long run, but it's just going to jump up and down so much right now. I'm kind of just waiting, and I'm going to wait for it to go on a spike, and then I'll sell covered calls on it. But yeah, it's just a really volatile stock right now. I just noticed that Ford is up 12% today. That is absolutely mind-boggling for Ford to have a double digits day. And I'm saying right here, it's, I guess, they're moving to the double electric F-150 production capacity. Oh, so they're going to double their production capacity. Well, hey, I'll take it. I almost sold covered calls on that, or sold a put on that. But I'm really trying to get my cash stock option balance situated. So that being the case, I have gone through, and I talked last week about I want to have more of a foundation for my portfolio to like help weather the storm a little bit, and just keep things stable and hopefully constantly moving up instead of having like really big gaps. All the stocks I have right now, aside from Ford and Levi, they can swing anyway. They're not super stable stocks. So I have gone through and picked out some. And the way that I'm going to do this is there's a few. So like, I'll just go through the whole list. Sprouts Farmers Markets, I'm going to keep 100 shares. I have 200 right now. And once those shares get called away, I'm going to just wheel one contract of it because I really like that company. Levi, I have 200 shares right now. I'm going to do the same thing. I'm going to get it down to 100 shares and then just keep wheeling it. Ford, I'm probably going to wheel also. So I kind of just want to have shares so I don't have to have 100, but I would rather, if I'm going to have it long term, and I would like to have Ford long term, then I would rather just be wheeling it. So I guess makes more sense to do the 100 and just keep constantly getting the cost basis down. So yeah, those three probably going to keep wheeling it. Apple. So I'm going to have all those. I'm going to be wheeling those, right? And then where is it? Then Riot, same thing, 100. Winnebago. I was going to do a poor man's covered call on Intel, but after doing a bit more research and talking to some people who know a lot about Intel, I guess they're in a very, very weird spot right now. So traditionally, their CEOs have all been like businessmen, for better or worse. And that being the case, looking at the numbers, they had been cutting research and production and just everything that you don't want in a technology company they were doing. But now they have a new CEO who I guess is an engineer by trade, and he is turning the ship 180. They're going back towards research and development. They're building new production plants. So Intel could be good, could be bad. I'm tempted to do the PMCC on Intel because I think that research and development and all that will get them out of, the channel that they've been in forever. But it's just a little bit too speculative, I guess, for the poor man's covered call. Winnebago, pretty solid company. And I think this year, anything to do with travel is just going to shoot up. So I may, with Carnival, I may get that to 100 shares so I can start wheeling that too. But I think, yeah, anything travel related this year and then into 2024, I think is going to do well. All the COVID stuff, I just can't see it lasting this long, like much longer than it has, even with all the new strains or whatever. People are just getting over it. So yeah, I think I'm going to do the PMCC on Winnebago. And those are the main ones. So I'm going to have 100 shares of each of those ones and just be wheeling them. And then the Winnebago, the PMCC, and just selling covered calls on it and hopefully never get assigned and just keep making money. So with that being the case, with the leftover cash that I have after that, so all of that is going to be going towards my balance for long positions, right? And then, if I'm correct, there were 10 other stocks that I had to whittle down to. I have another list. So there should be 10, which is going to be like Apple, Fizz, CVS. 5 I'm going to keep wheeling because I have 100 shares if the premiums ever go back up. If not, I'm just going to hold on to it. PCYO, Microsoft, LRCX. LRCX is a really cool company. They make the equipment that other companies use to produce semiconductors. So like AMD and all of them, they make the equipment that they use. So they're not really subject to like being the first one to, lead the way in all of the 5G type stuff. They get to profit off of anybody who makes it because they make the equipment that makes it. So I like them. There was another one, KLAC. Yeah, KLAC. They do the same thing, I believe. But I think the LRCX, it's just a bigger company. So with technology always expanding like it is, I think it's just a safer bet to go with the bigger company because they have more, you know, presence, I guess. And then SMH, I really want to capitalize on the on all the semiconductor technology, but I didn't. It's to me, it's just too hard to narrow it down to one or two companies that I really like. So that's just an index fund with 4 semiconductor companies, and so I get a little bit of all of it. And then steel is really just to keep my portfolio stable. So yeah, I don't think that one's too confusing. So those are the ones that I'm going to start with. End game goal is to get all of them up to 100 shares so I can be selling covered calls on all of them. But it probably won't even get close to happening this year. Because, I mean, you look at it. LRCX, it's $717 per share. Yeah. SMH is 310. Apple's 179. This is actually, I don't think, is refreshed. Yeah, so it's not going to probably happen this year unless I'm a wizard and I don't know it. But that's the goal I'm going to be working for. And then, I will find other stocks I like, I'm sure, or other spots that are good. So the way that I'm going to decide which stock to buy when I have extra capital, when my, stock balance drops below my portfolio allocation for it, is just mostly whichever one's going to be the furthest away from its 52-week high. So I have the percentage here of the percent off of the 52 high. So the Sprouts is their 52-week high is 30.61, and right now it's 30.26. It's only 1% off. Riot, I already have 100 shares of that, but it's kind of misleading because it's such a volatile stock. So yeah, same thing with the FUV. I already have 100 shares of that. So basically what I'm saying is like Fizz, it's 50% off. So if I had cash to allocate right now, it would go towards shares of that. That being said, I want a little exposure to all of them before I start really doing that system. So I do need to, this week, hopefully I'll have it by Saturday, have a chart beta weighted by how many shares I have in each one and how many I would like having allocated. And yeah, and that way I can actually see where I'm at percentage wise on every position. So yeah, that's the game plan for that. I do have, for each tab, I already went through and put the starting balances this year. So this is going to be for each individual stock, and I can just put what I did in there. I can do cash secured put, covered call, exercised or assigned. Yes, I know I put ASS. I like it. I'm keeping it. But yeah, it tells me my cost basis, theoretical. It's kind of weird because it's not my actual cost basis because I'm using the credits elsewhere. But I mean, I guess technically it would be like getting a dividend, I guess, and just not reinvesting it. But yeah, that's how that works. It'll just help me keep track of where I'm at with each stock. And this is what I was saying about the FEV. I had another tracker that didn't have all this extra stuff on it. It just had this. It was a lot simpler. But yeah, as you can see, my cost basis for FUV is 308, and it's at 778. But I've actually lost money on it. I mean, not really. I'm up on the stock overall because of the premiums from wheeling it, but I bought the stocks for 15 and then just wheeled it, and it was at 308. It's not because I was a genius. I literally just got lucky. The premiums were super high. At one point, I was selling like 3 or 4 puts at a time to get assigned more shares, and they just never got assigned. So yeah, I got lucky there that I just managed to scoop a bunch of premium, and yeah, got my cost basis way down. I am going to eventually put my crypto in there. This is for the option plays once I start doing iron condors and then credit spreads. I think Chinese indexes are going to be good things to run option plays on this year, at least for the next few months until we kind of see what happens with China. It should net me some pretty decent money. I still need to do more research. I've gotten a lot more comfortable with it, a lot more comfortable with all the concepts. So I hopefully will get all my portfolio balanced, and yeah, hopefully that'll start happening within the next month or so, but we will see about that. This tab's just for the deposits and withdrawals. I did deposit this week. I mean, not withdraw. I deposited $400, which will be every month, give or take. Just depends on what the markets are doing. If crypto is dropping, I'll probably put more into that instead of this. And then I also have the ETF portfolio on M1 that I also put money towards that. But like I said, give or take around 400 every month. And yeah, that should about do it for now. I decided I'm going to be posting videos on Tuesday and Saturday after the market closes. I live in Germany, so it's kind of, I'm not in sync with anybody that would be watching this really. So yeah, with my schedule and everything, it just works better for me to do a Tuesday video, which works out because then I can see what happens Monday. I can make my plays, and then on Tuesday I can talk through why I did what I did. And then on Saturday, I'll just review how the week went and how I'm going to adjust my strategy going into the next week. So I think it'll work out pretty well. Yeah, hopefully we make some money. Up about $200 for today. So I lost a little bit yesterday. I think like 200 or something. Ford's already dropped 2% from where it was at. But that is absolutely crazy. 2-decade high. Yeah, I really need to get 100 shares of that because that's what I was kind of thinking. Once, I think it's by 2030, everybody has to be producing electric vehicles, and all of the big companies, GM, Ford, they're primed to do it, and they can do it because they're already such large companies. It's not like Tesla where they have to figure out everything as they go. They already have so much push in the industry that they can just rapidly deploy them, in my opinion. And I wanted to capture some of that. Man, it's working out. When I first started looking at Ford, it was 11. And then when I transferred, I sold everything in my, had a dividend portfolio on M1, and I sold everything in that, and then transferred that money to this account. And yeah, so I made a lot of money on Ford before all this, because now my cost, I only have 3 shares now. I was wheeling them in this account, and they got called away, so I just, yeah, never bought them back because I was trying to get my cash positions right, and then I ended up buying Riot, and yeah, lesson learned. But Yeah, I like Ford. I drive a Ford. It's good. Anyway, I'm gonna wrap this one up. Another thing is, so after I start working on building that portfolio that I had, all those stocks, I do also need to. I need to find another good dividend stock, one of the aristocrats, and I want it in either financials or healthcare. I'm leaning more, or maybe one of each. Honestly, I don't know. It just depends on how my account goes, if I'm making money or losing money. But financials, I think, is a little bit more stable, which is what I want for the foundation. Healthcare could probably be a little bit more lucrative. I say lucrative, but it like maybe 1% more or something gain for the year. I think financials actually probably would be the way to go as the foundation. Plus, I have CVS in there, so I'll have to look into it more. But if I kind of want an insurance company, like Aflac or something. I think they're a dividend king or something like that. They just seem like it just seems like that'd be a good play. I was gonna do Coca-Cola, but with having Fizz in there, I didn't really want to double stack like that, a beverage company. And it's the same thing with having like SFM as opposed to any other grocery store. I decided to go with Fizz over Coca-Cola, even though Coca-Cola is an awesome company, because I really think that the health wave is just going to continue to just expand and expand and expand. And if you don't know, Fizz is the one who makes LaCroix, the carbonated water, which I don't personally like, but people love it, and they're gonna, I think, continue to grow. Same thing with SFM. It's a very organic food store. It's just that like healthy lifestyle. I think, especially coming out of COVID, everybody's gonna be wanting to lose weight, and I think that they will capitalize on that. People will be trying to eat healthier. Probably should look into some type of gym stock or exercise equipment or something, but I'm not too worried about it. I think that SFM and Fizz have more staying power than that. Fizz kind of like the carbonated water. It's a cop out for soda, but people can stick with it. I like that concept about it. And yeah, we'll see. We'll see if my theory proves to be correct. Only time can tell. But anyway, I'm going to end this one. It's already gotten longer than I would like. So I will be back Saturday and let you guys know how the week went.